All right, let's talk about something tough, but really, really important for anyone holding PLAZM right now. We're going to tackle that big, red, negative number that's probably staring you in the face every time you open your dashboard. Look, if that number has you feeling discouraged, you are absolutely in the right place. We're about to do a professional, data-driven analysis to understand what's actually going on with your position. So let's dive in.
Okay, but before we jump in, you know the drill. We have to get the disclaimer out of the way. This content is for educational and informational purposes only, and it is not financial advice. All DeFi protocols, and that includes PLAZM, involve significant risk, so please always do your own research.
Let's just start by looking at the hard truth head-on. If you got into PLAZM when prices were a bit higher, your dashboard probably looks something like this one from a real holder. Let's get precise with the totals here. Total cost paid, $261.23. Current value, just $31.67. That gives you an overall return on investment of negative 87.9%. Yeah, that stings. There's no way around it. But what if I told you that dashboard, while it's technically accurate, is actually measuring the wrong thing? That it's giving you a really misleading snapshot of your investment's true potential? Just stick with me, because that's exactly what we're about to break down. You see, that ROI percentage on your dashboard? Think of it like a snapshot in time. It only answers one question. If I sold every single thing right this second, at this exact market price, what would be the result? But PLAZM wasn't designed for that. It's designed as a long-term accumulation play. So the metrics that actually matter aren't about today's price. They're about the total number of tokens you've managed to accumulate and what your effective cost basis really is.
So let's do something radical. Let's ignore the dollar value for just a minute and focus on the real asset. This holder owns 896.23 PLAZM tokens. That number? That is the number that truly matters. The price of that asset is going to fluctuate, no doubt, but your ownership of the tokens themselves? That's fixed. This is the real foundation of your entire position.
So now we're going to do the math that your dashboard doesn't do for you. We're going to calculate the single most important metric for you to understand your position. Your effective cost basis, or, in simpler terms, your break-even price.
And it's actually a really simple three-step calculation. Step 1, we take that total amount invested, $261.23. Step 2, we grab the total PLAZM tokens earned, 896.23. And for step 3, we just divide the dollars you invested by the tokens you earned. This gives us our true, effective cost per token.
And that simple calculation gives us our magic number, 29.1 cents. Just let that sink in for a second. That is your break-even price. Any price above that number, and you are officially in profit. All of a sudden, that path to profitability starts to look a whole lot more achievable, doesn't it?
Okay, so what does that 29-cent target actually mean in the grand scheme of things? Let's put it in perspective. PLAZM's all-time high was over $12. Your break-even price is 97% below that high. This means you don't need some crazy euphoric bull run to get into the green. You just need a modest, sustained recovery from its recent trading range.
So, what could profitability look like down the road? This table projects the future value of those 896 tokens at different price points. Let's say PLAZM gets to 50 cents. Your initial $261 investment is now worth $448.12. That's a positive 71.5% return. Now what about $1? Well, now we're talking $896.23, a 243.1% gain. And if we look at $2, your position is worth $1,792.46. That's a 586.2% return. Suddenly, your perspective on that initial loss begins to change completely.
And this right here, this is really the heart of the matter. The dashboard view, which is just stuck in this one moment in time, it shows a really significant loss. But when we look at the future potential, this story completely flips. The exact same tokens that represent a loss today could represent a massive gain with just a modest price recovery. It really is all about perspective and your time frame. Now, of course, these projections don't mean a thing if there's no reason to believe the price can recover, right? So let's pop the hood and analyze the protocol's underlying mechanics, the engine that's actually designed to support long-term value. There are three core forces, and they're all working together to create upward price pressure. First up, you've got supply compression. As tokens get burned or locked up in staking, the available supply on the market just shrinks. Second, there's perpetual buy pressure. The protocol's treasury is constantly generating yield, and it uses that yield to buy PLAZM right off the open market, which creates consistent demand.
And third, we have declining sell pressure. As tokens for early investors unlock over time, the amount of new supply hitting the market gradually goes down.
That perpetual buy pressure we mentioned? Well, it's powered by the PLAZM Treasury, which right now holds approximately 5,000 DexFi bonds. The easiest way to think of these bonds is as yield-generating assets that are constantly producing revenue for the protocol. They're basically its economic engine.
And this isn't just some theory. This engine is already working. Those bonds have already generated over $52,000 in real, actual claimed profits, and that cash flows directly into the pools that buy PLAZM from the market, supporting the price every single day.
So when you boil it all down, it's a pretty simple and powerful equation. Less supply available, combined with constant buying from the Treasury and less new selling pressure, mathematically, this is designed to create a force for upward price movement over time. This isn't based on hope, it's based on the protocol's core mechanics.
All right, now that we get the numbers and the mechanics, let's talk strategy. Because you are not just a passive observer here. There are ways you can actively manage and improve your position, starting right now.
One of the most powerful strategies during a down market is something called averaging down. Just look at the dramatic effect this can have. Your current cost basis is 29 cents. By adding just $100 at today's low prices, your average cost basis plummets all the way down to 9.6 cents. Your break-even target is now 67% lower. That makes profitability far easier and much quicker to achieve.
But there's another powerful tool at your disposal, and that is time itself. PLAZM uses this unique time-squared mechanic. Here's what that means in simple terms. The longer you stake, the more you earn, but the rewards grow exponentially. So a 60-day stake doesn't just earn twice as much as a 30-day stake, it actually earns 4 times as much. This makes time your absolute biggest ally in accumulating more tokens.
And this is where it all comes together in a multi-cycle strategy. By taking your nearly 900 tokens from your first cycle and then restaking them for a longer duration in a second cycle, that T-squared effect can just dramatically increase your holdings. We're talking potentially to 9 or even 10,000 tokens. And while your total cost might go up a little, your new cost basis could plummet to under 5 cents per PLAZM. From this perspective, that negative ROI from your first cycle, it was simply the cost of acquiring the tokens you needed for a much larger, much more profitable long-term position.
Okay, so let's pull all of this together now. Let's look at the complete financial picture of your holdings in a final professional summary.
Here it is, the final comparison. On the left, you've got what your dashboard shows, a snapshot in time that right now looks like a failure. But on the right, you have the complete picture, an owned asset of 896 tokens, a calculated cost basis of 29 cents, massive future ROI potential, and the verdict that this is simply a position under construction. Your dashboard measures where you are today. This analysis measures where you could be going.
So ultimately, the crucial point isn't to ask, why is my ROI negative today? The real strategic question you should be asking yourself is this: where will PLAZM be in 12 to 24 months? And, more importantly, how many tokens will I own by then? Because those tokens are yours. The engine keeps running, the supply keeps compressing, and time is on your side. To close, please remember this final disclaimer one more time. This analysis is for educational purposes only. It is not financial advice. The projections we've shown are hypothetical and they are not guaranteed. DeFi investments carry significant risk, including the total loss of your funds. Always conduct your own research and consider consulting a qualified financial professional. Thank you for your time.